What's good, fam? Relating back to our video last week on brokerages, today we're talking about a specific type of stock that y'all may or may not be interested in, but are certainly worth your consideration. You're watching Sekider, and this is what we're watching for the second half of June 2021. Today, we're talking about stock brokerages. Now, before we continue, we'd just like to remind you that this video is meant for educational purposes only and isn't meant to replace the financial or legal advice of a paid professional. Furthermore, no mention of any stock on this page is an advertisement for that stock unless we state otherwise. We're just here trying to shine a light on the corners of our stock market for those that are new to our local exchange. Also, we would appreciate it if you could do us a solid, hit the like and subscribe buttons, and maybe share our content with others out there. We put in the work so that you can do a little bit less. Now let's get to it. Alright, so if you've got an investment account open in Korea, you may or may not have seen ads at your local branch suggesting investment in the brokerage itself. This is because, like most companies out there, these brokerages have the option of going public and operating as any company on the market. This raises the question then, if you want to invest, how do brokerages make money in the first place? Well, there are a few ways that we're going to rattle off before talking about the stock specifically, and we'll try to keep it short since deciding to invest in a brokerage firm necessitates learning about how to read them anyways. Alright, so one of the first and easiest ways to understand how a stock brokerage may make its money is through its use of fees and commissions. As is the case with most banks, there are processing fees that go into buying and selling of assets. At their core, brokerages are essentially middlemen who operate as a customer-facing end to the stock market ecosystem, which includes a lot of things like brokerages, market makers, exchanges, regulators, and us. Thus, brokerages have always charged customers a fee for facilitating our participation in the markets, which we covered in our last video as well if you want to check that out. In recent years, brokerage fees have dropped steeply with the advent of HTS and MTS services, but even still, transactions on every sale and purchase account for a portion of a given brokerage's income. We can see this clearly as one of the income streams as stated by NH2자증권 in their most recent earnings report. Now, fees for buying and selling of stocks as well as overnight fees for things like options increase the operating profits of the brokerage as more people access and participate in the market through a given brokerage. Thus, with the recent increase of retail investors flooding into the market in the past year and a half, many brokerages have seen large profit growth on the backs of increased activity in both stock and options trading. Now, other ways that brokerages make money include the provision of premium services like financial or retirement planning and advice, research and consulting, and all that kind of stuff. As we covered in our video, which you can link to in the top right hand corner of your screen right now, the more services that a brokerage provides, the higher the fees tend to be. Thus, it is often, although not always the case, that the firms with the largest revenues outside of their profits from order flow offer comprehensive services for their investors. For many discount brokers, they're able to cut most of these services in favor of charging lower fees, but actively incentivize their customers to trade at a high rate to compensate for the lost earnings potential. One particular brokerage in the US has become infamous for it, but I'll let you guess who that is. Now, another way that they make money is through the sale of financial products like funds. Whether mutual or index, the fees that you pay on funds often go to the brokerage. So, for example, if you're buying and selling in and out of KOSEF ETFs while using the QM Asset Management app, then the company itself would be receiving funds from both the maintenance of the funds that you're trading, as well as the transaction fees that you pay when buying or selling the security itself. Now, a real final way that they make money is through the underwriting of companies' IPOs, which is where a firm hires a brokerage to handle the financial due diligence required to bring a company to the market. In Korea, these commissions can get up to 5 or 6% of the total share value on IPO day. For last year's biggest IPO, Big Hit Entertainment, the firm chose to use multiple brokerages, including NH Investments and Securities, Korea Investments and Securities, and JP Morgan as their lead underwriters, and Mirae Asset Daewoo and QM Securities as other members of that group. Now, that being said, let's get to the brokerages to look into. Maybe you're investing with one of them right now and you may want to consider paying yourself with every interaction. Alright, now as we mentioned in our last video, one of the most popular brokerages for retail investors is that of QM Securities. The company's stock peaked at 162,000 won in January before trading downwards and bouncing around between the 117 and 140 marks since late February. Now, looking at the most base metrics, QM makes a solid argument for an undervalued stock portfolio with a PER of just 3.8. Reuters has its forward PE of 4.5, which is still very good all things considered. Also, as is common with other brokerages, they do pay a dividend, with last year's yield at about 2.48%. A basic financial checkup shows consistent growth in revenue every year, with costs dropping over the past 3 and more spending on R&D over that same time. Finally, net income saw a really big boom last year, but otherwise it still has been trading upwards over time. If we look at their balance sheet, their assets cover their liabilities by a slim margin, but their cash flows indicate consistent year-on-year increases in debt issuance. But that's also kind of the way that financial institutions work. You know, you give out debt, you get money from the interest. Anyway, if you're out there investing with Kium, it wouldn't hurt to look at their IR info and see if it's a security that has a place in your portfolio. Now, another brokerage that I noted as being popular amongst retail investors is NH This is an online brokerage run by NH Investment Securities, who also run a separate interface with NHQV Invest. Now, compared to Kium, their valuation is slightly higher with the Reuters forward PE of above 5, but they're still very much in line with the rest of the industry. Now, NH is a publicly traded company, but it's majority owned by NH Financial Group, who is in turn owned by the National Agricultural Co-op Federation, who holds a few decimal points above the 49% mark of the company, and it also is owned part by the National Pension Service, which has another 8.6%. Now, as an investor who likes security, I personally like this kind of ownership scheme since it means two things. One, due to its nature as a co-op-backed corporation, it's inherently a worker-oriented organization, which in turn means that it's likely to be a firm that provides perks for their employees, like an employee stock scheme, which the company does have. Also, lucky for us, NH Investment Securities does provide full English language earnings reports, which I'll link to below, and they also have an English landing page. So if you do want to look into this too, you'll have the opportunity to do so. Now, while there are a few other brokerages on the market, we're going a bit longer than I'd expected, but I would like to point out that not all brokerages are on the exchange as brokerages. That is to say, some of them are on the market, but can only be accessed through buying their parent company. For example, Shinhan Investment Corp, which can only really be bought by buying the entire company of Shinhan Financial Group. Same thing for Hana. Now, if you're looking to buy into the brokerage that you use and you use these brokerages, then make sure that you look into whether or not they have their own stock first. And if not, make sure to consider whether or not you want to buy the whole basket of companies or if you're better off without it. Alright, that's it for me. My goal was to keep it around the 8-minute mark, and luckily we were able to do that for you. Please come back soon because we're going to do a couple walkthroughs on some apps that you may want to use but may not be confident with, like Carrot, Tangun, the buy and sell app. If you're new here, this actually would be really helpful. And if you want to do arbitrage, this is also a good option. Alright, I'll catch you next time. Peace.